Good evening. Ira Epstein of Linn & Associates with your metals market wrap-up. And this is for Wednesday, the 21st of October, 2020, about 6:15 p.m. Central Time. Interesting day. Metals sharply higher today. The gold market sharply lower. It hasn't opened tonight, but I wouldn't be surprised if you get a little bounce out of it, as I'm seeing some early weakness creep back into the foreign currencies, which will probably raise the dollar a bit here. In the stock indices, everything's lost its bullish embedded reading, so a correction is underway. Energy markets still feeling the pain, and interest rates continue to work higher. So lots of mixed currents is the way to say that. And we don't have a deal yet between Ms. Pelosi and Mr. Mnuchin, so we don't know if we've got any deal making it its way. President Trump, about an hour ago, said he doesn't believe that Ms. Pelosi and Mr. Schumer want to do anything that'll make a deal happen one way or the other. So that gives you where he's coming from. But, you know, do you throw a little fire on things to get it done? It's a political season. Let's blame the Democrats for it. You know how the story goes. I don't have to tell you that. But let's go to the market and understand what gold is doing. Gold is up $23 for the week. Now, I want to come back over here because this is a fairly important close. 19.5 was this closed, and last week you dropped down 18.70, and right now you're just slightly over it by $5. If you can hold that and not get back under last week's low, it means you've had a successful test of the 18-week moving average of closes. And remember, this is a close-only chart, not the highs and lows. And maybe it means the gold is ready to move back to the upside in front of the election. It's hard to know. When we take a look at the action here, well, the one good thing is the market hasn't broken out again to the downside to re-challenge the 1850 level. The pattern is one where the market is trying to work higher, and you see that when you put the swing line on it. You have a clear pattern now of higher lows, higher highs. That is bullish. Until the market takes out 1896.60, the bulls have again taken control of the market. The market is over the 18-day average of closes, so the bias is up. So on this pattern right here, it would not surprise me, just looking at this and nothing else, that the bulls try to defend if it falls back to the 18-day average, that level. They don't want to see prices under 1896.60. Where might prices be headed to if they move higher? Well, I'll look at the Bollinger Band, and if we look at today's high, the market got as high as 1936. The upper Bollinger Band's 1934.10. The market's backing away from it. What about momentum? Momentum's overbought. I hate to say it, but until we know more, while the trend is up, the bias is up, and you're overbought, was that it on the upside? Time's going to tell. The bulls have control, but an overbought condition generally doesn't bring in further buying. In order for that to occur, prices are going to have to latch onto the upper Bollinger Band and start pushing it higher to force the stochastics up. That's how that would work. If it's going to happen, I don't know right here. I think the smart money took money off the table at that upper Bollinger Band. The gold-silver ratio still favors silver, as prices, while they did rally back up to the 18-day average, have fallen since back down, and that means that the silver's gaining a little on gold, and we have the same scenario. We have a market that has finally established itself with today's action. I want to make that clear. It already had the higher lows, but it had lower highs. Now, when it got up today to this price, it got up as high as 25.42.5. What's the upper Bollinger Band? It is 25.40. Well, I don't want to hit it there. I want to hit it here. It was 25.40.30. So let's call it 25.40.5, because that's how you would trade. You hit it, and you have since backed off a little bit. Again, it's identical. In this situation, you're overbought, the trend up. The difference here is the 18-day average of closes is at 24.45, and that is above the last break low, just like gold, just a little bit more above it. That is the number I'm looking for the pros to support the market with. Take out that 25.40.5. I think the pros go away from their long positions. I also think smart money came out of the market today. Copper market, this is very friendly. Now I'm looking on the first deep break in the market, maybe back to, I don't know, something between 310 and this upper Bollinger Band to see how the market gets supported. I expect the pros to buy because you have an embedded reading that's latched onto the upper Bollinger Band. I teach you don't buy the band, but you wait for the first hard break off of it. It normally doesn't go from a bull to a bear market. So I'm looking for support in it, and I think this is the number you key off of. The question is where to get in. I discussed that in my morning subscriber video because there's another key moving average I don't show here, and that will be the number. In the platinum market, you've got a pattern where the market, let's take off today's action. You had higher lows, higher high, you closed under the 18-day average. Today, once you took off, where'd you go to? You made a run for the 100-day average, missed it by $7, by the way, so that's not quite getting to it. You were pretty far away still. The trend is up. I look for the pros to support this market at 881.90. I think they throw in the towel if you get under this low, which was 852.10. Now, it doesn't sound like a lot. That's a $2,000 risk. If you put money management in, why would you do that? It's a lot of money to put at risk. So I am looking for the pros to support the market, but they better have a tighter stop than I do. That's too much for me. In the palladium market, you have broken out to the upside as well. We were just talking, this market was lower highs, higher lows. What was going to be the way it broke out? At this point, the market was still holding the 18-day average. It broke out to the upside. So momentum up, not overbought. Trend up. I think the pros will buy this market at the 2369.5 zone, looking for 2460 on the upside. So I'm still friendly that. The interesting part is the metal markets have come to life, including copper. So the markets believe, this is what I'm thinking, that good things are going to happen with stimulus packages and the like. Otherwise, why be up there? The cases in Spain hit over 1 million today. So we know in Europe that's the first European country to get that many cases. In the US, watch your national news tonight. We're on fire in terms of new cases. They're everywhere. The CDC just said that 15-minute exposure, not continuous, a day to somebody or some event where you're walking by someone and they have COVID, 15 total minutes you could catch it. So that's a change that they've done, and yet the metals are acting good. So my point is the market's looking at something else. It's looking at the economies of the world doing better. It's looking at the event that COVID, a vaccine, is going to be found. One of the people, I think it was with AstraZeneca's, by the way, test, did die. Not getting a lot of play, I feel sorry but for that test subject. In the dollar index, you've got the lower highs, lower lows, under the lower Bollinger Band. Expect the bounce. Not to be unexpected, you only stay under the Bollinger Band 5% of the time. That doesn't mean you're bullish. This market could just get over it and lean on it and still continue down. The popular theme is that a rescue plan will make this market bearish. No rescue plan can drive this market back up to that 18-day average. So you got to be very careful with what you're doing. I want to remind you that I put out at 5:40 in the morning a detailed video giving you so many different trade ideas. I don't just cover for the day. I cover weekly ideas. I cover longer term. That is the weekly. I cover shorter term. But every trade I put on is not meant to be a day trade. I hope you appreciate that. So I'm looking at the shorter term, the swing, and the longer term positions on this market. I cover the longer term trades on my weekly special edition that's included with all this. So we just look at that point at the weekly charts. You can see this both on a tablet. We give you a free, it's included in the subscription, it's a $60 a month value. We give you free our QT Mobile. It'll play all my videos. It'll give you market news, and I'm talking for the futures, everything that we're doing here at the Linn Group, charts and quotes. Duh. And all built for futures. And by the way, see my hair? I need to read it. We make the type this big. You can go back to the normal type, or you can go to the bigger type. What about oral commands on it? What I mean is nothing sexual there. Oral commands just mean you can talk to it like you do a Siri. And you say, hey, I want to hear my quote file. It'll do it. Bring up a quote of, bring up a chart of gold. it'll do it. So everything shows in that, as well as, of course, our website and all the other parts. I cover all this every morning in this exact order. You're able to pull on a slide bar and get to the area you want. So I am not looking for everybody to look at a 20-minute video every morning, but I cover every market as though that is the market you want. So if you're in a soft commodity, sugar, and I have traders that are doing that, away they go. By the way, I will be on Sky Business in Australia tomorrow, so we'll see what they want to ask me. You look at all this, you put it together, and what's the cost of it? Well, it's really less than you're spending probably on your Starbucks if you're going out. $7.95 for the first day, but if you're buying Starbucks, you're buying more than one a month, right? For the month, $15. 30 days of this. But you get your first month $7.95. You don't like it, you quit. How do you do this? Go to our website, www.iraepstein.com, under the word research, sign up there. By the way, do me a favor. Last question, I have something of you. We now have well over 10,000 viewers, and you're responsible for that in a big way. And those are subscribers to this channel. You're watching me on YouTube. Please tell your friends about it. The more we get, the more I want to do. It's that simple. We didn't get many viewers on our ag site. We got rid of that. We added ETFs and the like, exploding on all this. I'm Ira Epstein. You have a great day. I'll talk to you tomorrow.